Hello, and thanks for tuning in. You're listening to the Michael Jacobs Radio Show on the Building Fortunes Radio and the Humongous Radio Network. Thanks again for listening in. The Michael Jacobs Radio Show is featured on Building Fortunes Radio with co-host Peter Mingils and main distinguished host Michael Jacobs. We are here, broadcasting worldwide, online, to help make the world become a better place. Michael Jacobs is famously known as a personal financial strategist and trusted commercial loan specialist. Contact Michael and let him help you with many of your financial strategies. You'll be able to hear the Michael Jacobs Radio Show on the Humongous AM and Humongous FM radio network and on all major platforms, such as Amazon's Audible and Apple Podcasts, Spotify and iHeartRadio, and many of your other favorite podcasts. Share this show with the people that are important to you and let us help you make a difference in your world. Now, on to the Michael Jacobs Radio Show. Take it away, Peter.
Hello, everyone. Peter Mingils here. You are listening to us on, yes, the Michael Jacobs Radio Show. We are on the Building Fortunes Radio Network. If you see this all over the place, it's because it is. When we do this Michael Jacobs Radio Show, we put it on Building Fortunes Radio's network. It goes on Humongous Radio. It goes on Amazon. It goes on Apple's podcast. It goes on Spotify and a whole bunch of other places as well. So there's a lot of places that this actually shows up. So it's for your pleasure and entertainment value for sure. And the way this whole thing got started is I was doing some speed networking with a good friend, or became a good friend. He was a stranger when I first met him, of course. Manny Lopez. Manny does some cool stuff with his training and business coaching and everything, but overall, he's a really cool guy. He's a dad, got a couple of kids, and was a foster care child himself, and really focuses on his volunteer work on helping foster kids exit the system successfully, because it's a really bad situation for many people that exit the foster care system after they turn 18 years old. Many of them wind up homeless or dead. And Manny does some great jobs. Well, that's how I met Michael Jacobs. He was one of the first guys ever on the podcasts and on the webinars that Manny was doing. And I spoke to Michael. We did a radio show and kept in touch with him afterwards. And when a couple of things happened, I said, Michael, what are you doing to raise the awareness of what you do? You're a good guy. You're a financial strategist. You're doing commercial lending. So we decided to do a radio show. And of course, we called it the Michael Jacobs Radio Show. You can go to the domain name, michaeljacobsradioshow.com, but you can also go to michaeljjacobs.com, which is his LinkedIn address as well as his other domain name that we put together for him. And you'll have access to commercial lending, personal finance strategies, the radio show, and a whole bunch of other things as well. So it is always a privilege and a pleasure to talk about some really cool stuff with Michael. And I can only say this for those people listening in. Put this in front of every 18-year-old, 19-year-old, 15-year-old, and up to 115-year-old person you know, because they can learn some really great stuff, so hopefully sooner than later in their life, and probably rearrange their personal financial strategies a lot better. So we're going to talk about cool things today, but I first want to say hello, Michael Jacobs, and thanks for being here on your own radio show.
Thank you, Peter. As always, it is a pleasure, and I really do appreciate the platform that you give me. For the last 25 years, I have been working with individuals, families, small, medium, large-size companies, with the idea that if I could help educate people as far as how money works, and more importantly, how to make money work better for them, we might stand a chance in overcoming the huge lack of financial education in this country. And then for me, the next step is to empower people to assist me in the creation of their own personal and or corporate financial strategies, so that they can see how they can retire on their own terms, help support an aging parent, funding the college experience for their kids, making sure that they have proper protection and the legacy planning. And in my opinion, the greatest value is tax efficiency. There is no greater crime than giving the government $1 more than absolutely necessary, because in my humble opinion, they're just going to mismanage it anyway. So at the end of it all is the execution of the strategy. So I work with over 200 financial companies like BlackRock and Gabelli and Morningstar and Oppenheimer and AIG and Transamerica and Fidelity, and the list goes on and on. So ultimately, at least in my opinion, it's like if I have a strategy without execution, it's nothing more than a dream. Now, today's topic is logical investing versus emotional investing. When am I using my brain versus when am I using my heart? When does it make sense to use one versus the other? You know, you mentioned how we met Manny Lopez. Manny always talks about stories sell and statistics tell. So Manny, having lived his own story and the utter horribleness that was his childhood inside of the foster care system. The foster care system is a highly broken system. And when you hear his story, he always follows it up by, in my opinion, the most telling statistic. And that is, when these kids turn 18, it's what they call getting timed out of the system. So if they haven't been adopted, they're now basically kicked out of the house and left on their own. And within 2 years of timing out of the system, 2/3 of all of these kids are either dead, homeless, or in jail. So the brain says, let's fix this problem, right? There's an opportunity here if we can redo this, fix the system, make it more efficient, make it better for the kids. There could be financial opportunity. However, for Manny, that is not, everything he does is to benefit the foster care system and get it changed. Make it so that the kids have a safe environment. Make it so that when these kids are timing out of the system, that they have a platform that they can enter into the next chapter of their life and stand a chance to actually be successful. So his heart is, I don't want any other kids to have to go through what I went through. And his brain is, if I can actually pull this off and have it benefit financially and benefit the system, that is the best of both worlds. But what I have often found is we as human beings, we tend to be either or. Some of us are more analytical, right? Our brain never shuts off. Others lead with the heart. So I'm going to use myself as an example on both. So my uncle got me into investing. And we skipped right over stocks, bonds, and mutual funds, and we jumped right into options. So I somewhat equate options to, you know, for those of you who've ever gone to Atlantic City or gone to Vegas, being on the craps table. You can make a tremendous amount of money very quickly, but just as soon as you can make money very quickly, you could lose it all very quickly. So to me, I look at this more as the emotional side. I'm up. The endorphins are running. Oh, my God. It's my day today. I'm going to make up for all the losses that I've been chasing. Right? All these different things that are kicking in that are driving me to want to continue. Now, the analytical side of me if I'm in that situation, is going to say, what are the odds for the house? The house is the casino. What are my best odds? What if I'm going to pick a game, what's going to give me the best odds? My goal, my desire is still to win. Hopefully it's my day, but I have a strategy going in. So when I first started investing, I understood I can make money if my investment goes up. I can make money if my investment goes down. So there's a strategy in how I want to go about doing this. Now, mind you, I was 18 at the time, so I didn't truly understand everything that should go into making this decision. But I looked at it like, this gives me an opportunity to make money regardless of what happens. That was my analytical side. So my first investment, I took $500 and within 3 days turned it into $1,500. Could you imagine the endorphins running here? This is the type of leverage that options can provide. You could turn $500 into $1,500. This is Microsoft. Now, mind you, this is 1989, 1990. So it wasn't at the very beginning, but Microsoft was one of the key leaders in the tech field. So I'm thinking I'm making a pretty good decision investing in one of the key leaders at that time in the tech field. So the next time, because at that time, when you're dealing with options, you have something called a strike price. I think the investment will get to this level. If IBM or Microsoft or whatever is trading at $95, I think it's going to $100. It's playing the upside. This is called a call. If I think that Microsoft's at 95 and is going down to 90, that's called a put. So I want it to either go to 100 or 90, whichever way I'm playing it. And at that time, typically on the third Friday of every month, your option would expire. So either you hit your goal, you didn't hit your goal. If you hit your goal, you're making potentially a lot of money. If you didn't hit your goal, you lost your entire investment. So it's like going to the track, right? Praying to God that your horse comes in. So now, my second time around, in 2 weeks, I turned $1,500 into $3,500. Okay, it took me a little bit longer, but I'm liking this trend. So the third time around, I go from Microsoft to Disney. Now, Disney, for me, represents more of the emotional side of things. I, like many other kids, when I was young, my parents took me to go see Mickey Mouse. In today's world, my brother, my sister, they took their kids to Disney. So, I mean, this is a family type situation. So, round 3, I turn $3,500 into $7,500 in a week. So Mickey Mouse is good to me. Now, in 1990, I have both my brain and my heart working towards making me a whole boatload of money. So I'm going to keep going with Mickey Mouse because he is not going to let me down. However, in 1990, Euro Disney opens up. So now I got $7,500. When I'm looking at my brain, my first mistake was I didn't diversify, different investments. I'm just taking the next hit, see where it goes. So $7,500 gets put into Disney. My $7,500 is 20 grand, 3 days before the expiration date. Now, my greed factor is telling me, oh my God, this is the one. I turned 500 into 20 grand in 4 months. Here's the problem. Greed said stay in. I could have gotten out with 3 days left to go and had 20 grand. No, I'm going to ride it all the way through. And the numbers from Euro Disney come out, and they didn't come anywhere close to the expectations that the broker-dealers put on it. You know, back then you had the idiots on TV, and, you know, Smith Barney might be saying this is going to go up, J.P. Morgan saying it's going to go down, and depending upon which idiot you want to listen to, you're going to make decisions based on what you are expecting. So now Euro Disney falls flat. Disney is profitable, but Euro Disney, which apparently had a huge portion as to what was driving Disney as an entity up or down. So now I don't reach the expectation. I don't reach the, I don't reach the goal. My 20 grand is gone. I am sitting there having a freaking heart attack because when I look at brain versus heart, my heart was like my childhood is built around Disney. Disney allowed me to go from 3,500 to 7,500 in a week. And all of a sudden, Disney lets me down and my money is gone. So, momentum, endorphins, greed, all of these things were driving me forward when I give myself a little credit because I wanted something that was going to allow me to test my skills. And when I saw victory, I didn't have the ability to walk away. So when I look at an investor, it's kind of like, why is our brain often our biggest financial asset? Or sometimes it can be our greatest liability. So the investor invests after investor A, the emotional investor. They invest after hearing exciting news, right? A week and a half ago, 2 weeks ago, the IPO for SpaceX. Everybody is like, oh my God, I got to get in this. We buy because everyone else is making money. There is no way that SpaceX can fail. If nothing else, it gives me an opportunity to tie my money to Elon Musk. So the problem with all of this is when prices fall, which, by the way, early last week, the price on SpaceX had fallen 23%. So basically, most of the gains that people had by getting in on the IPO were now gone. And people panic when prices fall. The problem is, by the time we see a correction, by the time we see the prices falling and we decide, oh my God, I got to get out, now I've lost money. And what tends to happen is the same people who panic and get out, maybe they're putting their money into cash. Now they're waiting for the tides to turn. I'm going to see an uptick and I'll get back in. In reality, what I have done is I've locked in my loss. I got out before, by the time I got out, other people had started getting out, driving the price down. And because I waited to start to see the price going up, so I sold at the wrong time and I bought back in at the wrong time. Now, investor B, my logical investor, they have a written investment strategy. I'm going to figure out what I'm going to do and why, and I'm going to look for trends. It is not necessarily one specific company up, but what are the primary companies? What are the primary industries? Where are things headed? If I want to short companies, which companies are on the way out because they're not keeping up with technology? I study the numbers. I buy based on long-term objectives. I'm not day trading. I can afford to be more aggressive in my approach if I have a longer-term strategy. So if I'm 2 years or less, I look at that as short-term. The risk factors that I'm going to take, and again, this is my brain kicking in, the risk factors that I'm going to take are going to be much less than, if I'm midterm and I'm in that 5, 7, 8 year range, I'll be a little more aggressive, but not nearly as aggressive as if I'm long term. So if I'm 40 years old and my retirement objective, let's say I want to retire, I'm going to use this term loosely and say early, at 55. What do I need to be paying attention to if my goal is retiring at 55? And what I mean by this is if all I have in my retirement is my 401k, my IRA, traditional retirement accounts. Government's a funny animal. They're like, don't touch your money too soon, because if you touch your retirement money prior to age 59 and a half, right, we're going to hit you with a 10% early withdrawal penalty on top of your income tax. Don't touch your money too soon. Don't leave it in too long. If we don't start to take that money out by what is now age 73, now we're going to hit you with minimum distribution requirement. Now the penalty is 25% on top of whatever taxes you should be paying. So the brain in me is like, what is my time frame? What do I want to invest in? What are the trends showing me? And the thing that I give them credit for is they're able to ignore the short-term market noise. Marketing, advertising, social media. Different companies are going to put their branding, they're going to put their messaging out, and they're praying that they can reach the maximum amount of people. And if I can manage to find somebody who has control within their community, and now all of a sudden I can get them putting that word out because other people are following them. In today's world, the younger crowd calls them influencers. Imagine if I can get an influencer who has 30 million followers to put out the messaging of my brand. So if I know who these influences are and I'm looking at their messaging, this gives my brain something to function on. So a question that I would ask everybody, because it's important that we understand ourselves, am I analytical or am I emotional? Am I putting in the work? Because, let's face it, there's a huge lack of financial education in this country. So I may want to gain the knowledge, but I don't know where to go to get it. Do I take that risk? Do I listen to my friends they may be making money on it, but do they know enough of how to keep that money that they made? So who do we think is going to be wealthier in the next 20 minutes? Or 20 years, I should say. So what are some common emotions? Fear, greed, hope, pride, regret, envy, excitement. What is fear? Oh my God, somebody else is making money. What if I don't? Did I miss this opportunity? Greed, I never have enough. Now, the problem with greed is if I use it to my advantage and I say, okay, this is what's going to drive me forward is my greed. I'm going to do the research. I'm going to do this. I'm going to do that. Nobody is right 100% of the time. Have I been taking my gains out along the way, or am I greedy and I want to keep on leveraging? Hope. Hope is a great thing. It gives us the strength to move forward. But if I bought in at the wrong time and I'm hoping that my investment will correct itself and fix itself, that hope may keep me in a sinking ship. Pride. I can't be wrong. I'm never wrong. I am the smartest guy in the room. So you know what? I'm going to ride this thing out until I drown. Regret. The first time that I invest, I'm the example. Do I look back on that and say, God, I should have pulled out that 20 grand? Absolutely. Now, I can look at this in one of two ways. Either I can learn from the fact that I should have gotten out. I tell investors all the time, when you go into an investment, have a goal. And I'm not talking about becoming wealthy overnight. I'm talking about if I could walk away from this investment being up 15%, 10%, 100, the numbers are relevant. If I can walk away at that point and be happy with it because I got a gain and I reached my goal, inevitably, there are going to be times where that 15% goes to 30. So yes, I left money on the table, and hopefully I don't regret leaving that money on the table. I more look at it like I am happy because not only did I walk away with that 15%, but the next time I invested, I said, okay, if I can get 15% again, I'm ecstatic. Now I got 2 wins at 15%. That I have no regrets because I reached my goal. I'm happy with my goal. Envy. What is all marketing and advertising built around? It's keeping up with the Joneses. Oh, my neighbor just got a Tesla. Even though I'm happy with, I had for myself, I had a 2003 Toyota Corolla. Now, most people are like, Mike, this is not a dream car. For me, at that point, I was 32 years old. I got 270,000 miles out of the original engine and transmission. I only replaced the brakes twice. And what got me is for the 8 years that I had that car, I was on my way out to San Diego for what I thought was going to be 3 months. It wound up being 3 years. The timing chain went. So my mechanic was like, Mike, this car has been nothing but good to you. But if you're going to go drive this car 3,000 miles, when will the engine go? When will the transmission go? You already have $1,000 plus expense. It might be time to get out, right? Go get a new car. Go get another car. So envy is, do I keep up with the Joneses? Because we make the same money, maybe they make a little bit more, and I don't want to look at my neighbor driving his Tesla. Excitement. Excitement is fleeting. It's there 1 minute, it is gone the next. So emotional triggers, watching CNBC every day, friends making money, social media, election news, recession headlines, family opinions. What are you why are you investing in that? Haven't you watched the news? Haven't you seen this? Haven't you seen that? Now, for the true investor, they're going to look at what everybody else sees and is afraid of and find the opportunity. Warren Buffett often said, you know, when people are buying, that's when you sell. When people are selling, that's when you buy. Right? How do I utilize that information? But the biggest one is fear of missing out. FOMO. Right? Oh my God, everybody else is doing this. I got to do it. So let's take a look at the logical investor. Goals, data-driven, valuation, risk tolerance, time horizon, diversification, cash flow needs. You know, the emotional people right now are having a headache. The logical people are understanding. If I don't have a goal, what am I trying to achieve? What does the data say? The problem with data is in today's world where there's so much of it, it's controlled by the media. People will often tell me, Mike, there's millions of pages of information on the internet, which I agree with, but the problem is, in my humble opinion, we are at the mercy of the intent of the content on the internet. What is this person trying to get me to do? Is it in my best interest? Is it in their best interest? Is there an ulterior motive? We talked about it before, influencers. Influencers, the majority of them, and I don't begrudge them this, whatever they're putting out, they're getting paid to put out. So are we at the mercy of the influencer giving in to the highest bidder? Now, Peter, I'm going to say that we are about ready to come up on a break.
Yep, we're going to do this. We made a Michael Jacobs radio show jingle. I'm going to play about a minute or so of this so you guys can get this stuck in your head. Here we go.
Thanks for listening in to the Michael Jacobs Radio Show on the Building Fortunes Radio Network.
For strategic financial planning, for commercial lending help, he sees the path ahead so you can move with confidence. Call Michael Jacobs for strategic financial planning. Call Michael Jacobs to avoid financial blind spots. Call Michael Jacobs for the next right step. The Michael Jacobs Radio Show. Michael Jacobs focuses as a personal financial strategist and commercial lending specialist. Ready when you need a guide for strategic financial planning, for commercial lending help. He sees the path ahead so you can move with confidence. Michael Jacobs Radio Show.
Perfect. I love that song. I would play the rest of it, but I want to get back to the conversation you're having.
Sure. All right. So, when I'm looking at my time horizon, imagine this. You're 60 years old. You want to retire in 2 years, and you haven't begun to plan yet. I'm asking you, Peter, where does the logic come in, and where does the emotion come in?
Oh, if I'm 60 and I'm thinking about retiring in 2 years, I think I'm going to start buying lottery tickets. Seriously, like I need a big hit. I'm going to go to Vegas and kind of bet it all on red or something, whatever you might do. I don't know. That's a tough spot. It's much better to have a little bit better long-term planning. So I'd be.
Go ahead.
I don't know where I'd be. I mean, I could make an argument for logic versus emotion. But if you're in the 60s, well, everybody's situation is different. So maybe it might be that my nest egg might be in the house that I live in if I bought it early and I have some accumulation and can take advantage of that. But tough spot.
Absolutely. So now the problem comes in. Let's say I retire at 62 and I have no earned income and all of my retirement is tied up in my house. If I have no income, even if my house is paid off, I'm not going to be able to access the money in my retirement.
Right.
Because the banks are going to say you have no way of paying this back. So
that's when people that do the reverse mortgages and whatever the other ones are, whatever they call them.
I could do the reverse mortgage. And this is kind of where the emotions come into play. My goal was I want to leave my house to my kids or my grandkids. But since I didn't have other assets, since I didn't have other income, now in my reverse mortgage, my house is going to pay me instead of me having to pay my house. And while granted my beneficiaries, my heirs, will have first right of refusal because the bank is ultimately going to take back the house because they're lending against the house. So somebody would have to come in and buy out that loan. So when I'm looking at the emotions behind it, I am very fearful if I'm 60 years old and I haven't begun to plan yet and I want to retire in 2 years because I can't afford the risk to be as aggressive as I might think that I need to be. So the first question...
Can I interrupt for a second, Michael?
Yeah,
because,
go ahead.
A lot of people that might be listening in that may not have lived a life or may have a sheltered life, they don't understand all the situations where someone might be able to run into that situation. So you would think that somebody, wait a minute, you're in your 60s, you have no retirement, whatever. It could be that maybe through either one of several, let's call it situations, maybe negative situations, divorce, medical issues, unemployment, bad business. There's a lot of ways that someone's life might end up in that position that they weren't anticipating when they're in their 20s and their 30s and they thought they were bulletproof forever.
I'm so glad that you said that because that is, now we're getting into what I like to call the human side of money. The human side of money are all the stresses that we face when dealing with our personal finances. Again, the loss of a loved one, the loss of a job. How do I have the financial conversation with my kids and my grandkids? Sometimes the parents don't want to have it. Sometimes they don't know how to have it. I find it astonishing. There's roughly $60 billion of unclaimed assets in this country. It's because the parents never sat down with the kids and are like, hey, this is what we have. This is where it is. These are the people that you're going to want to talk to after we're gone. So that now we're boiling into emotions. Because the human side of money, I find, because I deal with corporate as well. And from a business standpoint, three biggest things that they're always dealing with, and I don't care what type of company it is: cash flow management, tax efficiency, and employee retention. Now, employee retention, the purpose of that employee retention is it's very expensive to replace employees. That's the business side of it. The human side of it is, why do people leave their jobs? Now, I know most people are saying, well, Mike, I want more money. And look, I get that, and I don't begrudge anybody that, but that is not always the case. Sometimes it could be, I love my job, but I hate who I'm doing it for. My boss is a tyrant. My boss doesn't even know I exist. So imagine this. I'm going through a divorce. 95, 98% of the time, it's not a pretty picture. Sometimes you're fortunate and both spouses realize we're better off as friends. You have an amicable split. But if I'm going through that stress of a divorce, because divorce isn't just I'm no longer, my spouse is going to be gone. Maybe I'm fighting over the assets. Maybe I'm fighting over who's going to get the kids. I've seen things where people are fighting over the dog. But it's with all of these different things that are going on in that background, there's a pretty good chance that I might take that stress with me to work. Now it is affecting my production. Right? Now I'm miserable at work. My coworkers are beginning to hate me. Now all of a sudden, my boss is noticing. And I'm sitting there thinking to myself, you know, I'm in a company with 1,000 employees. My boss may not even know my name. But I'm like, why is this guy picking on me? Doesn't he understand that I'm going through a divorce? Understand you're going through a divorce. He doesn't know your name. Now you're taking this personally. You're like, I got to get out of here. This company couldn't care less about me. Again, brain, but I am glad that you brought up situation. When we look at risks of investing, shout out to all the brain people, what if taxes go up? We already know inflation's going up. What if I can't keep up? Things that we don't talk about, sequential risk. For those of you who have heard my previous shows, I've talked about this. If I wanted to retire in 2008 and I was 6 months away, all of a sudden the market corrects. With the amount of time that it took for the market to correct, I may have had to have worked another 5 years. I wasn't planning on working 5 years. But Lord, I was planning my first trip. And yet it happened. So this is sequential risk. What about longevity? If we're talking about retirement, I always say there's two buckets to retirement. There's my expense. I'm going to have some type of housing expense because I'm going to have taxes. I'm going to have utilities. I'm going to have maintenance. I'm going to have insurance. Because I don't pay my homeowner's insurance, problems come about. But then I have my lifestyle. Do I want to travel? Do I want to buy a business? Do I want to play with my grandkids? Do I want to open up a goat herding business? Whatever I want to do, how much am I going to need? And how long am I going to need it for? And where is this money coming from? So the logic, I'm asking those questions. The fear is the what if. Logic is how. The fear is my why and what if. So, what questions do the brains ask? Does this investment fit my plan? What's the downside? I'm willing to take risk, but does the level of risk meet the sequencing of my money? See, if I want to do high-risk investing, invest in startups, growth and expansion, in alternative type investments, that kind of stuff, we are now beyond the traditional type investments. Should I really be using my kids' education to fund my high-risk investing? What is my exit strategy? You mentioned before, I also do commercial lending, and it is astonishing to me how many business owners come looking for capital. They don't understand the financing behind their own capital, and they can't tell me why they got into the business and what their exit strategy is. If I'm a real estate investor and I'm saying, okay, I want X amount of properties. Are you buying these properties because you want to leave them for your kids? Are you buying these properties for leverage? Being able to take the equity out of the property. If I'm buying for leverage, I'm not going to want to buy 1 to 4 unit residential properties. I'm going to want to buy 5 units and up because the financing behind it is completely different. If all I want is a little bit of cash flow to subsidize my W-2 or my 1099, I buy some properties, I rent them out. What am I actually trying to get out of it? What assumptions am I making? If I'm relying on the internet to provide me information so that I can make a logical decision, the question I really need to ask is this information even correct? Again, we're at the mercy of the intent of the content on the internet. And social media is even worse. Because social media, in my opinion, operates on I'm right, you're wrong. So if my qualifying criteria on social media is how many followers an influencer has, I might as well go to Vegas or go to Atlantic City and go play craps. Now, they also will come in and say, what if I'm wrong? Now, what's interesting about this is analysis by paralysis. What if I'm wrong? It's a good question to ask, but if I am paralyzed by what if I'm wrong, and now I don't make any decision, fine, I'm not losing money, but I never give myself the opportunity to gain money. So, what are some of the pros and cons? When I look at the pros and cons on the emotional side, the pros protects against obvious danger. Selling after discovering company fraud. Some fear prevents reckless investing. Like we just said, hopefully it doesn't lead to analysis by paralysis. Can preserve cash during bubbles. Because of my fear, I want to be investing, but I'm not about to invest all of my money. So someone who's uncomfortable buying overpriced, whether it's tech stocks or real estate or whatever. So what are some of the cons? Many a times I wait too long and I buy high. By that same token, I sell low. So instead of buying low and selling high, which is the goal of every investor, I wind up doing the opposite. I panic sell. Oh my God, check out what's going on. The war, this, that, the government's going on strike. Sometimes it leads to overconfidence. I've been right the last 10 times. Man, it's time to up my bet. Meanwhile, past performance is not indicative of future returns. Revenge investing. This is fascinating to me. Revenge investing. It's almost like I'm trying to get revenge on myself because my last investment failed. So now I'm going to show myself. It's almost like an internal combustion. Chasing performance. The logical guy is looking for trends, but the emotional person is seeing something going up. And it's like, again, here is my opportunity. Ignoring diversification. I'm just going to do what everybody else is doing. In reality, maybe I want some money in my 401k. And maybe I want some money in gold and silver and options and real estate and life insurance and annuities and this and this and this. Each of these products are designed for different things. So I'm accomplishing all my different goals. The first question that I always ask every one of my clients is, if I could help you to achieve your top 5 financial goals, what would they be? Now, this question is loaded with emotional and logic. I'm going to set a goal. My logic is kicking in. What is it that I'm actually trying to accomplish? Now, I think the argument when I want to retire on my own terms and help support an aging parent and funding the college experience for my kids, these are emotionally driven goals. Being more tax efficient, the emotion is, man, I get to give the government less money. The logic is, man, I get to give the government less money because all they're going to do is mismanage it. When I'm taking these types of things into effect, this is going to dictate the type of solution that I need to come up with. And then understanding that solution, now it gives me the ability to seek out who I'm going to implement it through. A lot of companies out there offer the same products, but their ideal client is going to be different. If all I want is the upper 1% of this country, and I'm not worried about JQ Public, there's going to be a lot of creativity that will go into those products, but I'm more likely JQ Public isn't going to be able to afford it, and they're not going to meet the minimum qualifications. So, again, I make the argument logic versus emotion. I want for everybody to understand there's a time and place for everything. And I get that people who tend to think with their brain, that's how they're built. People who tend to lead with their heart, that's how they're built. It doesn't mean that we can't teach ourselves how to utilize both, but we need, when it comes to our money, first we have to understand ourselves. Are we brain or are we heart driven? What do I want to accomplish? What am I willing to do to accomplish my goal? What are my driving factors? What are my contingencies? And then we can have a clear vision. I personally believe that when we are capable of creating the plan. And I'm not saying that we have to be able to do it by ourselves, but at least if we have the opportunity to contribute to the creation of the plan, and we understand how we're going to be able to execute the plan, there is a much greater chance that we will keep the plan. And this is how we avoid that 60-year-old who wants to retire in 2 years and hasn't begun the plan yet. So we have drawn up on the hour here 2 questions that I would like everybody to ask themselves. 1, if I could achieve my top 5 financial goals, what would they be? And 2, what is, knowing that I'm either brain or emotionally driven, what is the best way for me to be able to do this? And again, over the last 25 years, I've seen products come and go. I've seen tax laws change. But the one thing that remains consistent is the huge lack of financial education in this country. This is a huge part of why I do this podcast. It is what has driven me forward over the last 25 years of my life, because I believe in serving my way to success. So for all you listeners out there, I make my time available for you guys. I appreciate you actually listening. So I am going to make a 90-minute, no cost, no obligation financial strategy session. Not only the initial, but the follow-up as well, available to all of you. Now, I warn you early, I can go for days because I find the manipulation of money fascinating. Sometimes you got to reel me back in. But if I get to see that light bulb go off over people's heads, that's how I know that I'm getting to make a difference. So I'd love the opportunity to be able to make a difference for all of you valued listeners.
So what's the best way for people to get in touch with you and take advantage of that?
So they can go, the best way is my cell phone, whether you text or you call. The magic number is 443-506-3841. You can also go to michaeljjacobs.com, and there will be a way that you can set up the appointment through that.
Perfect. So for those people listening in, that was fascinating, Michael, to go through the things that you went through and all the different scenarios. So that was great. And unfortunately, I'm going to be 64, so I checked off a lot of your boxes. Like, you know, if you live long enough, you'll be able to make 100% score on the Michael Jacobs radio show on the logical versus illogical, or the logical versus emotional.
You know, it's funny because I was just having a conversation with a friend of mine from college. I'm 54, he's 53, and we started talking about all the people that we've been noticing from high school that are passing away. And it's like, how the hell did we get here? We're not that old. But then I see all the friends of mine from high school who are grandparents. And again, my sister, who's 8 years older than I am, is a grandmother 2 times over. And I'm thinking to myself, okay, being her sibling, theoretically, that makes me old enough to be a grandparent myself. And I cannot. I can't envision how I got here. So when I look at the planning side of things and what I'm doing so that moving forward, because there is a statistic out there, 51,000 people in this country are 105 years old or older. What if I become that? What if I'm part of that statistic? Would I be ready? Right? I never saw myself as being old enough to be a grandparent, and yet here we are. So the brain is saying, how do I be prepared? The heart is going, oh my God, what if I actually live that long? Am I going to be healthy enough to enjoy it? Is my brain still going to be functional? In reality, it could be a blessing or it could be a curse. Brain versus heart.
Yeah, all very interesting. Yeah, it would be great. Why don't you just start selling crystal balls? That would be a hell of a lot easier if you just sold a crystal ball. You could see yourself in the future, knew exactly how it was going to end. This way you could reverse engineer your life. And unfortunately, that's not possible. Not in this lifetime.
Well, I look at it this way. If the pet rock could be successful, then I think that my crystal ball could stand a chance.
That's true. Before you get sued into oblivion for false claims. But who knows?
This is not a solicitation. I am not looking to raise capital. All I'm saying is that conceptually, if one thing was able to succeed, and like I said before, past performance is not indicative of future return, so not all crazy investments will work.
Yep. Well, great information. So for those people listening in, check them out. Michael Jacobs Radio Show. So go to michaeljacobsradioshow.com, or you can always see some of the other stuff on Jacobs.com as well. And you'll see about his personal financial strategies, commercial lending, the radio show, some other things as well. Michael, thanks for being here. I thoroughly enjoy these radio shows that we do together. And sincerely, I just wish I had access to this information many years ago, because it probably would have changed the course of some of the things that I did. Some of the things I probably would have made similar right decisions or similar wrong decisions. But I certainly would have gone into it with my eyes more wide open. So thanks for being here. I'll let you wrap it up.
All right. So I'm with you. I only wish I could go back in time and speak with my previous self. So I like to believe that I am learning from the mistakes that I have made. And, full disclosure, I have made mistakes, as I am only human. So hopefully my journey that has led me to here will help others to be able to take a better path.
Perfect.
Always appreciate the platform, Peter.
We'll see you next time on the Michael Jacobs Radio Show.
Wow. You've been listening to the Michael Jacobs Radio Show on Building Fortunes Radio and the Humongous Radio Network. If you want to listen to this again or tune in to the other radio shows, you'll be able to hear the Michael Jacobs Radio Show on the Humongous AM and Humongous FM Radio Network, and on all major platforms such as Amazon's Audible and Apple Podcasts, Spotify and iHeartRadio, and on many of your favorite podcasts. Michael, Peter, and I are glad you listened in. Call Michael Jacobs or contact him through the michaeljacobsradioshow.com website and see if Michael can help you with your personal financial strategies, and make sure you avoid any financial blind spots. Share this show with the people that are important to you. Thanks again for listening in. And now, go make the world a better place.